Well, I guess that's a yes. So we got some news on the calendar today. I think we should probably focus on that. Gross domestic product, personal consumption and expenditures. How very nice. Should we trade that? Should we watch the markets when that news comes out? Oh, skip it. Pan says skip it. Wow, everybody's quiet, huh? All right, fine. So let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I think I have the National Futures Association likes it if you have visuals. We've had long conversations about it. Not only do I have to tell you, but I have to show. How do I get this? Why is it view zoom? Can't be too safe. There you go. So good morning. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN if you want us to be. We're a variable spread if you want us to be. That's right. You can customize your trading business. We're not one size fits all. And I do these sessions for you because I want you to be successful. And maybe when you develop the skills and confidence to trade real money and start your Forex trading business and career, you'll choose Traders Way as your prime brokerage firm, and we can thrive together as partners for many years. And thank you for your vote on FX Street to make me Forex Speaker of the Year. Appreciate that. So just a quick look around the world here, get an update. me. S&P 500 futures up 0.11%. Euro Stoxx 50 up 0.31%. Crude oil down a whole 1%. Holy smokes. 10-year T-note still unchanged. Still 1.82. Pretty. Euro USD down a little bit. 0.2%. As far as the other global stock markets, DAX slightly up, FTSE flat, Hang Seng up almost a full percent, and yen pretty flat, USD yen. Yeah, so GDP, huh? One thing about GDP, I mean, it is important, but it is fairly backward looking, isn't it? So we're discussing what the what the economy looked like in the first quarter. Do we even care? Was the economy good in the first quarter? You know what I mean? I have no voice. Hang on. We'll try that. Oh, that's a lot better. So GDP, personal consumption and expenditures and all that kind of stuff. So what is the formula for GDP? G plus I plus C plus X minus M. Okay? And you could take that out further because what is X minus M? Balance of payments. You probably track balance of payments, right? And balance of payments you can take out even further, and you can do PIB, which is primary income. Oh, primary income. Is B? Primary income. How do is a BI payment? No. Transferred? That no. PI source. PIS? That sounds like piss. Anyways, there's if you are an American resident and you're living, however, in let's say China, and you earn a job, an income, you earn a salary from your job, you owe U.S. income taxes, right? Plus, you're a U.S. citizen or a U.S. resident, but you happen to be living in China, so you're not a permanent resident in China. So the income that you're producing or the productivity that you're producing does count for the United States of America. And then okay. And then what about people that live in U.S. how do you say this? How about people that are sending money from China to the United States? That can get counted, but maybe not under GDP proper, but maybe under what is it, gross national income? Maybe it's a GNI issue versus GDP. So, anyways, you can. I'm having a browser problem. So you can calculate your GDP. You can look at government spending, which is designed, basically a year in advance through the budget. And then the I is business investment, business spending. And then C is consumer spending, otherwise known as consumption. So that'll come out, and I don't know. It seems to me that the first quarter wasn't that good, and second quarter seems to always be better, right? Right. So, anyways, we're in a world about worried about interest rates going up. So a good number would certainly give liftoff for the Fed to go another. So Euro USD making its way down from 112. Seems to me that somebody's playing that psychological level. How about you? And then if you do believe that traders are sitting around waiting for these psych levels, what is the sentiment of the market? All right. What is the sentiment of the market? Does it want to go up or does it want to go down? So not confused. No, I don't think it's confused at all. I think things get in the way. But what if you worked at a bank? Let's say you work at a bank. Do you make decisions based on 15-minute volatility? Or do you say it is the position of the bank to short the Euro USD on rallies? And I think it's more of a situation like that where you're like, well, based on our macroeconomic analysis, which amateurs don't do, we want to short the Euro USD at 112, 113, 114, or 115. And that's it. Oh, but did you see that big spike on the blah, 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 blah? We're going to sell it at 112, 113, and 114. We're done. I mean, enough analysis. We're done for the year. If it goes up, we're selling it. Right? Okay, and that's that. But, amateurs, they freak out, right? Okay. Yesterday, working with Traders Way clients, in the some news came out, but for some reason Euro USD reacted harshly. And I looked around, no other yen pairs, no other dollar pairs reacted. Let me try to get this on screen here. And I laughed and I chuckled and I made a whole bunch of comments. And what I did, and I know you guys can't see it on your little on the webinar, you can't see my webcam very well, but I held up a piece of pyrite. What is pyrite? What's the nickname for pyrite? It's a stone that I'm holding. It's a beautiful, beautiful, beautiful stone. What's the nickname for pyrite? Why is it on my desk? Is another question, right? Yeah, it's called fool's gold. And so I did a big speech here. The Euro USD reacted dramatically. Nothing else moved dramatically. And I said, well, I might not be a smart man, but I know what fool's gold is. And look what it ended up doing. You know how many people got slaughtered on that? Maybe they made some money on the way up, but then they kept buying it on the way down, and then what? Then they. What would you do if you were a big bank? And let's say you were not trading mini lots, but every time you pulled the trigger, it was at least $1 million, probably more like 5 million. Every time you pulled the trigger, 5 million. Boom! And remember, you're not leveraged 500 to 1 as a bank, right? It's 5 million cash or close to it, right? Are you going to be chasing price around because you're like, oh my God, look at all the green candles. Oh, Euro USD is going up. And you start freaking out, right? Or you just say, no, well, we did our analysis. So, so we're thinking, I might be interested in selling here. I might be interested in selling here. Right? And you're done with it, right? Now, can you see my analysis here? Let me back out one more click. Can you figure out what my analysis is? What's my trade plan? What? Let's get rid of the pivots. What do you think about that? Try to get rid of that fib. We'll probably have 10,000 fibs, huh? Did I miss it? Fibonacci, F would be an F's Fibos. There it is. Delete, 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 delete. All right, there's my trade plan. It seems pretty calm and focused, doesn't it? Can you see what it is? Oh, Wayne, that's easy. It looks like a breakout strategy. Uh-huh. Does this show that I should be freaking out and chasing price because Euro USD is doing something strange on a 50-minute chart and went up 35 pips, 40 pips? Oh my God, look at that 40 pip move, right? The other day I was showing Traders Way clients a video, and there's two guys standing next to the trading pit of frozen concentrated orange juice. They're standing around talking. All of a sudden, the market starts going crazy, and they're like, "Oh my God, it must be the Dukes. The Dukes are in the corner of the market. We should do something." They all jump in and they're buying, not because they did analysis, fundamentally or technically, but only because they think someone else is doing something and therefore they should be doing that too. And then they start buying, and they by the end of the day, they lose the shirt. Of course, the Dukes, as everybody knows, it was the Dukes. It was the Dukes. Mortimer has a heart attack, right? People without a plan, right? So there are three types of people in the market. Two of them have trade plans. They're bulls and bears. Okay? The third type doesn't have a plan. They're called pigs. Right? And pigs get slaughtered in this market, right? So it's one of these things like you can't just be, reacting. Oh, look at the Euro USD. Now, the funny thing is, when that was happening, when it was freaking out, I said, look, pound dollar's not doing it. USD yen's not doing it. Aussie dollar's not doing it. CAD's not doing it. I'm looking at the yens. The yens are fairly stable. This is all Euro USD. Doesn't seem proper. It doesn't seem to be related to the news. It's fool's gold. You're a fool to trade it. And that's within 20 seconds of it happening. And I think some pigs got slaughtered on that. So what's the genius? What's the genius part? I have a plan. That didn't make any sense, so I'm not going to trade it. Right? So act as if you want to trade like a professional, act like a professional, right? Say, well, that's weird. I didn't have that planned. Wonder what that's all about. Okay? And then simplify. There's my trade plan on a 4-hour chart. That could be interesting, right? So, anyways, there's what do you say? Coaching under fire, trading under fire. You can't fake that. So don't freak out on fool's gold, right? So anyways, look pretty okay. We'll see where the down is. Down could be quite a bit down. And I do believe there's a big pivot in there, right? So let's do this again. Insert indicators, custom, history, pivot points, and let's go falsies on this one and biggies on this one. Biggie, can't you see? Sometimes we're, oh my gourd. Seriously, Wayne? Seriously? Oh, snap. That's a big pivot, guys. Big Papa right there. Huh? Isn't that interesting? It's more and more interesting if you were paying attention to say, well, I'm going to sell it to the retracement. But also, what's the bottom of the market? Can we call that a pivot point too? Isn't that interesting, guys? Okay. The day before, so the last Thursday of the month, okay, the last Thursday of the month. Actually, this might have been today. No, it was yesterday. Okay, so the last Thursday of the month, we hit the extreme monthly target. That's funny, isn't it? Isn't that funny? The last Thursday of the month, we hit the monthly extreme target and then stopped. That's even funnier. That's more funny. That's funny like three clowns telling jokes in a small car with big shoes on. That's really funny. So, what do you think? Do professional traders use monthly pivot points? What do you think, Andrew? Mm-hmm. Yeah, I mean, clearly that was some profit taking, right? And what did they say? Get out a few pips early just to make sure we get filled. Because also when you're short, you have to cover your spread too, right? So they're just like, yeah, somewhere down there. Okay. Look where we started May. Somebody said, wow, is this overbought or what? Ugh. And then where did it stop? Monthly Central, right? Starts the trip again. Where's the next real stop? Well, how about this one? Where's this stop? S1. So so this top here, R1. Then the next stop, monthly central pivot. Next stop, S1. Actual bottom, S2. Hallelujah. But where did it stop originally? Where was, this kind of, we have to include that one. M1. So they may not be playing the M3s and M2s very much, but it did come back and participate on the rally and drop it. And notice this, it participated on this rally and dropped it. So, so you see this red zone and the green zone, just in case you don't know. It was calculated this day here, the first day of the month, May 1st, May Day, right? Right there, it was calculated. And so for what? 4 days straight, we rallied up like a rocket. Look at the velocity. And where did we stop? The monthly projected high. And then the whole entire market reversed and fell for the rest of the entire month and stopped at the monthly projected low. Oh, yeah, could completely be a random walk. Yeah, could be completely random. But somehow, I don't know, I think it might be important. What do you think? Huh? Eh? So anyways, have a plan, Stan. All right. So I wonder what June's going to be like. Maybe I should just take the month off, huh? Let's just call it Ramadan. Let's go on Ramadan holidays and just come back and say, oh, what happened to that Brexit thing and that Fed thing? How'd that go? Because I took all my money off the table and walked away. Right? Yeah, so what happened to that Brexit thing, huh? Could be a giant black swan, huh? Yeah, the G7. Yeah, yeah. Yeah, Abe went crazy, huh? Everybody laughed at Abe. I think that's going to be very interesting to see how the yen ends up reacting. But Abe's out there like, it's the end of the world. We have to do something. He literally said, this is like another Lehman Brothers. The global economy is about to crash. And they all laughed at him. Too much sake. Too much sake. Put Abe, he's great. He's so funny, huh? I like that Abe. He's a good guy. We'll drink another. Huh? Yeah, it's so funny. They're like, yeah, well, no, it might be you screwing it up. And I'm telling you, I probably was Abe's biggest fan about 3 or 4 years ago when it all started to happen. I did these big, great speeches about how strong and how amazing it is and all the things great that they're doing. And then just a giant cluster, they started jacking up taxes. And I'm like, oh my God, that makes no sense at all. They just killed everything they worked for. And then they did it again. And then, it stops working after a while. Right? It's sort of like penicillin and bacteria, right? It works, it kills the germs for a while. And then all you have is uh, penicillin resistant bugs. So now you got to change your penicillin, change your medicine to kill those bugs. Right. And then they become resistant to that. Well, for 3 years, yeah, the Abenomics, and it worked out well in the beginning and then it started to work less, but it was still fine. And then they started jacking up taxes and then they jacked taxes again and they just wasted a couple of years. And all of a sudden, like the market's resistant to their stuff. And I don't know what they're going to do now. And Abe's like, this is the end of the world. We've tried everything. There's nothing more we can do. Yeah, well, you screwed it up. It's not right. That's what the rest of the world's saying. It's not our problem, Abe. You had a good idea and then you went out and screwed it all up. So, so calm down, old man. Have another drink. Don't worry about it. Eat your sashimi. So what's going on here? This is gold. I'm getting ready for a bounce in gold. Several days ago, we talked about it falling from 13 down to 12. We're getting pretty close to that, and there should be a bounce from 12 to 1250. What do you stink? Wow, hang on. There we go. Again to the Aussie. Yeah, maybe, huh? Now, the funny thing is, maybe that's what's happening. As Aussie comes down, Japanese retail investors are withdrawing their money from Australian bonds and bringing it back to Japan, and the yen gets strong. So anyways, this is gold, okay? And I have it set up kind of like a head and shoulders, but I'm not predicting that it'll do a head and shoulders move. But, you know, that's that. And based on monthly pivots, what's the top? What's the top of the monthly pivots? This right here is the top. M3. And M3, if M3 is your top, what is the projected bottom? Another way of saying it is if you're a bear, you want to sell in this zone. So if you're a bear and your plan was to sell in that zone at between the central pivot point and M3, what is your target? I'm sorry, I have it here. I'm on the wrong week here. Your sell zone is here. And here it is. Okay, that's your sell zone. And by the way, this is the first day of the month. Okay? And we're smack dab on the M3 on the first day, the first trading day of May. Okay? Your target is M1 based on pivot point theory. Okay? So on the first day of May, if you were a bear, okay, this is the most ideal sell spot. This is the first day, and your target is here. Hey, another coincidence. Another coincidence. Yeah, that's that. Hey, keep ignoring monthly pivots, guys. Don't worry about it. I'll keep it for myself. And don't tell anybody else. Don't, right? You're a premium member. You pay a whole $1 a day for this value. It's not a bad deal. Huh. Okay. Next. Do you really want to hurt me? What do you want to do with the yens, yo? Oh, any tips on reading the move at the start of the month? Yeah. Have a bias before the month starts. Okay. What's the book in front, Wayne? Am I missing something? What? Oh, this one? Ha ha. Can you see this? You can see the book on my desk? Oh, that's funny. Ha ha ha. You got me. Well, I'll show you. Ooh. 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 Can you see that? Can you see that? Not quite up. Trying to get light on it. That's a Gerald. Is it Gerald? No, Bernard. Bernard Baumhol's book. What a name, huh? That's Mr. Bumhole. Yeah. Bumhole. Anyways. Hey, it's his name. What can I say? It's called The Secrets of Economic Indicators. I was just wanted some light reading. Actually, I'm taking a course at the IMF, and it's very complicated, as you might expect, since I don't have a PhD. And it's cool though. Like, I don't know, 7 or 8 classmates are central bankers. So anyways, I just, I don't know. I actually didn't. I was going to start reading it, and I read maybe 5 pages, and then just got distracted. But anyways, good call. But anyways, amazing that you can see that. So maybe your view is different. What I see is, I don't know if you can even see that, but I see the tiniest little window. So I'm not sure what you see. Is that right? I used to work next door to the San Francisco Fed. So I had an idea, I think it was last year, that I would charge like, oh, I don't know, I think it was like $5,000. Excuse me. But you would, let's say you pay me $5,000, and then you have to fly your butt out to America, but you'd fly to Jacksonville, Florida, and I'd have you picked up. So once you get to America, all your expenses are paid for. And the first thing we do is drive you out to Jekyll Island, Georgia, which is not far from Jacksonville. And it's where the Federal Reserve Bank was created by J.P. Morgan and his powerful friends in Washington, D.C. and in New York City and from Chicago. And we'd spend the night there. We would have a trading event. We'd actually trade in the exact room where the Federal Reserve was created. Maybe have some drinks, smoke some cigars, have fabulous steak dinner, that kind of stuff. And then we get on a train or something, and we'd work our way to Washington, D.C., and we'd go visit the actual Board of Governors building. This is like the Fed's Fed, right? The Board of Governors, and get a tour and get to see where the actual FOMC meeting room and all that kind of stuff, and then see the White House, and again, more drinks, more cigars, more live trading. And then we'd get on a train again, and then work our way to New York City and go visit the New York Fed, Wall Street, so on and so forth, and limousine tour of New York City and all that kind of stuff. I'd pay for the hotels and the food and the travel and all that kind of stuff. And I thought that'd be a cool like week, wouldn't it? To be hang out on Jekyll Island, go visit Washington D.C. and the Board of Governors and the White House and all that kind of stuff, and then go to New York City and see Wall Street and the New York Fed and all that kind of stuff. I thought it'd be super sweet, maybe just 10 or 12 of us. We should do it sometime. Okay, so anyways, we're topping up. Anyways, that's my idea of a vacation. So here we are. In one of those uncanny moments when, like right here, somebody asked me about the imminent crash in the stock market, and I said, well, I don't really see that happening. Boom. It can go down, though. Somebody sent me a thing about the the global economy is going to crash today and tomorrow. Is that DeBista? I think it was DeBista. What's his name? There's a what's that guy's name? There's a guy that's like anti everything that's on TV a lot. Was it Peter Schiff? Writes a lot of books, does a lot of talking on TV. Yeah, weirdly, has a book coming out. Yeah. So, anyways, if you don't know this, today and tomorrow, the global stock market, all stock markets and bond markets around the world are going to collapse, and the dollar is going to lose its reserve currency status. In fact, all fiat currencies are going to collapse, and we're going to move to the gold from the gold standard. Except people can't afford gold, so they're going to move to silver. Okay, and he said, but the thing is, in his presentation, he said, there's a 1-to-16 ratio between the price of silver and the price of gold, but that ratio only occurs when people trade silver as currency, not as an industrial metal. And he says, like, that's what it is now. So he predicts it's gold is going to go, or silver is going to go up 300%. Right? And he said this in like January or something. So he says it's going to go from, I think he says like $34 or, an ounce, and it's going to go up to, 120 or something like that. But since that he made the video, it dropped to $14. And now it's a whopping $16. And he said it would go from 34 to 120. So maybe his timing's off, but he predicted it's going to be the 28th of May. So today is the 27th. So I don't know, maybe if he's right, something's about to happen today. Maybe it's GDP comes out and it's horrible. GDP is going to be so bad today that people are going to lose faith in the U.S. economy, and we're going to drop all paper currency. Yeah, or Yellen's going to just close the Fed, slide the key under the door, and walk away. So I don't know. Now, if it's true what he's talking about, if it's true, my guess is what it is that the United States would default on its debt. I don't think they're going to do that today or tomorrow, though. Right? But yeah, let's say Trump wins the president of the United States, and then he decides he wants to default, because I don't follow what he says very much, but didn't he say something like, one of his ideas is that he would basically default and then renegotiate? Yeah, well, people are like, yeah, that's a really bad idea. And he said, well, we will renegotiate. You're like, yeah, okay, that worked for your casino, but you can't really default. Yeah, no, but that's the problem, right? A government is not a business. They're completely different operational structures, right? And when you run on the full faith, you just can't default. You just can't. And then there's no faith anymore, right? So anyways, so yeah, okay. If the United States defaulted on its debt like Russia did, do you guys remember long-term capital management? It was a hedge fund run by 2 or 3 people that won Nobel Prizes for economics and finance. And through hedging, they found a way to arbitrage and hedge risk to basically zero and still make a profit, which ain't bad, right? Except when you had a black swan event like Russia defaulting. Well, their risk-free their risk-free model collapsed, and these Nobel prize-winning economist and hedge funds that are managing billions and tens of billions, $100 billion. It collapsed. Now, if the United States collapsed, holy smokes! If it defaulted, if Russia can bring down long-term capital management, the United States would bring down everybody. So, anyways, Peter Schiff is saying you should probably build an ark, even though you live in a desert. He's crazy. So we'll see. Maybe he's not crazy, right? So if there's some big thing that's going to default, if there's some big debt that needs to roll over today, because today's the last trading day. So I don't know why he even said the 28th of May, because that's a Saturday. Well, what the hell would that do to the U.S. economy? But maybe there's some event that's going to happen in the next couple of hours that will collapse the stock market, and then the 28th would be the end, you know. And then Monday morning would open up horrible, and the stock market would be down 30% in a day. Maybe. I hope not. And if so, maybe you want to buy silver. Luckily, Trader's Way offers you silver if you want to trade silver. All right, so silver's $16. Peter Schiff says it's going to 120. What do you think? Should you get in on that? What are you going to look for? Well, when you look at the commitment to traders report, Pan, one thing you should look at, if you note that a lot of people are on one side of the trade, then you should go back as far as you can and see how high the high is relative to previous highs. And if it seems to be on the extreme end, that you should prepare for a reversal. Because if everybody's long, there's only one way down. Or, you know, if everyone's long, there's only one way and it's down. And what you need is just some tiny event to spook the herd, and then the whole herd shifts. Even if that means they have to run off a cliff, it doesn't matter. So that's the other way. Do you guys know Larry Williams? All right, Larry Williams, if you were interested in the Commitment of Traders report 20 years ago, he was the COT man. Yeah, there you go. Nicely put. And he won a trading contest, maybe a couple of trading contests. And therefore, he sold a lot of books and a lot of seminars and stuff. And then he even taught his kid how to trade, and his kid won a trading contest. I think his daughter. So, you know, and again, he ended up selling a lot more books and a lot more courses. But his whole shtick was basically, you know, weekly charts and weekly COT data. And he might make, you know, 3 trades a year, 4 trades a year, but and maybe different markets, right? So maybe he'd make, let's say he'd make more like 20 trades a year, but he would like short wheat for 9 months. He would, you know, and then move on to something else. And one of the things he would do is he would look at extreme highs and extreme lows, and then realize that those extremes will have to come around, and the hedgers would have to do the opposite. You know, the hedgers would get out of hedges, and the speculators would go the other way, and so on and so forth. And the market would swing from, you know, from highs to lows. And, you would look at the extreme and then basically say, well, over the next, 12 weeks, I might sell. And then he would hold it for 30, 40 weeks, which is a lot different trading than what you probably do. But so if you see, for example, though, Pan, is if you look and you say, wow, look at silver, look at the COT data on silver. It's like 90% long. Well, it doesn't mean short, but it does say look for a potential catalyst for everyone to freak out. Because remember, the people that got in late, their stops are close, which means if they get triggered, it brings the market down, which next level of stops, which freaks the guys out that are hugely profitable, which will then take profit, which then will move the market down. They hit the other stops. And you get this combination of profit taking and stops being knocked out, and the whole thing cascades and reverses. And then, of course, if the market's coming down, you don't need to hedge anymore, right? If you were hedged against a rise. So now, your hedges are coming out, and, you get this huge change, but it's a sea change. It doesn't happen in a second, but all of a sudden, over hours and days and in a week and several weeks and even a month, couple months, things could change, and somewhere along the way you should note the change, and people are going to unwind silver if everyone is net long. Think of it as yens. What happens to the yen when everybody's long yen? It crashes. One of the reasons the yen got so strong is that there were so many people short the Japanese yen. So let's say long USD yen for months and months and months and months, but it refused to go up. And that's a big short waiting to happen when everyone's losing faith. Everyone is in the same direction, and it still won't move. Well, all of a sudden everybody got out. So anyways, look for extremes. All right, we're about 90 seconds away from GDP. Government spending plus business spending plus consumer spending plus exports minus imports. Absorption plus balance of payments. Yeah, hang on to your hat. By the way, first quarter was pretty bad, so I wouldn't expect a good number. But if we did get a good number, the market's going to be shocked. And you'll see a June rate hike, at least in the trading behavior, and you'll probably see ripper strong dollar. But I wouldn't be shocked on a bad number. I'd be more shocked on a good number.
2.8 trillion, and from 2.89 trillion prior. Get the second reading. First quarter GDP in just a few seconds.
0.8.
GDP 0.8% is 1/10 lower than expected. Personal consumption 1.9% is 2/10 lower than expected. Price index at 0.6%, 1/10 lower than expected. And core PCE at 2.1% is in line with expectation.
I got it even faster than the Trade the News guy. That's right. I wake up. I bring awesome. Oh, I see, Fred, you might have asked a question, but you need to type in the chat, not the question. Find your chat window. I don't even have the Q&A window open. It's not something we use. Excuse me. So some yen strength, dollar index slightly weak, but even euro dollar went up. So there's no this move is a little bit more to do with a slight yen strength. Actually, that's not true. Aussie's moving up, man. Look at that. That might be an interesting move here. Let's just for fun, I want to move this over to Aussie yen. I hope you don't mind. So look at commodity currencies because a not bad US GDP is good for commodities, especially if the world was prepared for a bad GDP. I mean, look, the number ain't good, 0.8, but it wasn't as bad. I mean, it could certainly have been surprisingly bad, but it wasn't surprisingly bad, which is actually surprisingly good, right? So I don't want to make too much of it because that's still a range. But what if we did it like this? You got to get yourself together. You're stuck in the moment. Can't get out of it. There we go. Who's playing what? I guess they're what? No? All right. Well, we'll do it this way. You know, if you wanted to be long, you would look for another even fib of that, wouldn't you? I'm not suggesting it's a good setup by any means because we got this going on, but wouldn't you at least set up a breakout or a dip or what would you do? But anyways, 0.8 for first quarter GDP doesn't seem to be the end of the world, does it? Oh, now the US is going to default on its debt. Core PCE 1.9 versus 2.1. That's disappointing, but again, not the end of the world. The interesting thing about that is that's probably what the Fed is using, not CPI. Yeah, good. Well, I'm glad you read it, first of all, Andrew. And yes, that is true. They do talk about PCE. They very rarely talk about CPI. Right? But the funny thing, of course, is the media talks about the CPI. The CPI, the CPI, the Fed has to do it because of the CPI. You're like, well, if you know anything about the Fed, they don't use the CPI. But thanks for that input. So very little happening today. Looks like so far, I'm not saying it's going to end this way, but Monday is a holiday in the United States of America. So maybe it's a holiday weekend already. Some traders have already cut out and gone away. They're on their net jets to the Caribbean. Have you guys ever thought about working for a bank? while you're learning about trading? You ever thought about working in like a foreign exchange support desk or some sort of FX department at a bank? Seems to me you should be you should keep your eyes open for such a thing. Especially if you want to be a hedge fund manager one day. You say, well, I worked at Barclays for 3 years in the FX desk. You know, it might be a support desk, but yeah, I get alerts every so often from something I set up somewhere. But remember one time in Atlanta, it wasn't something I was interested in, but I thought, you know what? If I was a little younger and not married with kids and not already doing stuff, but if I was young and starting out my career and I knew Forex was the thing I wanted to do, it was the basically the call center for high net worth traders and mostly institutional investors, as well as the bank's trading desk. So if they had a question about a trade or a position or an error they got or they needed to confirm if something was processed, there's for the bank there was a call center, and they're like, "Yeah, I'm just calling about I just moved $20 million and I don't see it. I don't see it. Let me look that up, sir." Anyways, and it was part of the foreign exchange department at the bank, and I thought, you know what? There's an easy 9 to 5 job. It's probably a 24-hour thing, so you can probably get hours that allow you to be free the hours you want to be, so you can trade. Plus, the bank's going to pay you for training, and you're going to pick things up, and then hey, one day maybe you can work your way onto the trading floor or the trading desk, right? I thought that'd be interesting. Just do that for a couple of years and learn the ropes, then meet the right people and kiss some hands and shake some babies, and all of a sudden, you're on the trading desk for the bank, right? Because that's the type of job I don't think you bring stress home, right? You just show up, do your hours, and go home. All right. So, anyways, I suggest you guys should think about it, huh? Yeah, fairly slow here. Euro USD zip back. There's the Aussie yen, didn't do a whole lot. Uh, uh, let's go back to the euro, as they say in Europe. The what? The euro. The euro. I don't know what you're talking about, dude. Oh, the euro. That was what I said. The euro. All right, good. Say it, don't spray it. Well, there's that little pullback going on there. Went a little higher before it stopped going a little higher. Like traders are just selling it at resistance. Pretty nice. Pretty straightforward trading. Nick said, would they offer something like that in the New York area? Are you joking? Oh my God. There's so many foreign exchange jobs in New York City. It's redonkulous. They're basically all in New York City. There are some in like the West Coast. There are some in places like, I live in Georgia, in Atlanta, Georgia. It's a big city. There's lots of regional banks. Those regional banks have some departments, right? That's not a big deal. New York City, oh my gosh. Every bank is in New York City. You have to, Nick, work for a bank. You just, You owe it to everybody else that don't live in that area. You owe us, man. You need to go get a job. Yeah, well, let me tell you, the Oxford Cambridge kids have no idea how to sit down and make money. They barely have a concept of what money is. Remember when I was young and in college, very entrepreneurial, no money at all. I had to be entrepreneurial. So what I'd do is I'd take my student loans and I'd go to car auctions and I'd buy 10 cars with my student loans. There's risk. But anyways, I'd have money to be able to travel as well as to pay for school because I'd double my money, right? So I'd pay the school with money, but I'd have all this cash left over. So I did a lot of traveling. I met a lot of people, and I remember meeting these East Coast rich kids, right? And one of them was complaining. He's like, "Yeah, my dad's going to be mad." I'm like, what? I'm like, why is he going to be so upset? And he's like, "Yeah, I'm like down 50 grand, and and he doesn't know." I'm like, "What do you mean? He's paying for your school?" And I mean, he should have an idea that it's 50 grand to go to your school every year. And he's like, no. It's not my tuition and room and board. I put 50 grand on his credit card. I'm like, 50 grand? Holy crap. You have $50,000 on your credit card? And you're 20? Yeah, my dad doesn't know about it. I'm like, what the hell did you do with 50 grand? I've never even seen 50 grand in my entire life. I'm like, it was from like another planet. $50,000. Yeah. What did you buy? When I was in college, I would spread ketchup on bread, and that would be dinner. I'd have like $9 to spend at the bars on the weekends for the entire month. Right. But hey, I found a way. I take my student loans just like that. Boom. They'd give me 10,000 in student loans. Suddenly I got 20,000. Boom, pay all the school debt. Now I still got 10,000. That's going to get me through all of this, and I could do all this traveling, and all of this and do that. But just funny, huh? So that idiot he's going to now what? Go work for a bank. He's like, I know how to make money. He doesn't even know what money is. Has no concept. Right? Before going to college, I worked an entire year to save money so I can go to college. I know what money is. I know exactly what money is. Yeah, maybe. Yeah, you're right. Kids are more clued up. There's no doubt. Doesn't make them smart. It makes them educated. One thing though, I was talking to someone that teaches like, I don't know, it's even like, I don't know what she teaches, like third grade or second grade or something, right? And she said, kids now, they just give up. They're like, you give them something that they find difficult and they just quit. They're like, it's too hard. And they're finding psychologically it has to do with these young kids are just used to games on tablets and stuff and on mommy's cell phone, on daddy's iPad. And they'll play a game like that. This sucks. And they just quit. Next. And they're like, no. You have to keep trying. And eventually you will beat the big boss at the end of the level. I remember playing video games. And I would try for 22 hours in a row until I finally beat the big boss at the end of the level. And I'd finally do it. I finally win. I'm on to the next level. right? That's what my generation did growing up on video games. And the kids now are just like, ah, quit. This sucks. Next. They just move on. And you have to like, no, 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 no. You can't just reset. You just can't reset in the middle of the game, right? So they're saying, these teachers now are playing board games. Remember that back in the day when parents sat down and played games with their children? I just played like a 5-hour game of Monopoly with my children. So it's just interesting. So are those kids gonna like be the ones to make money? But all right, we finally got to move here. Hey, good thing it go up after that big speech about staying a bear. If you're going to be a bear, be a bear. Thank goodness. So it makes me wonder if the future Oxford people. So like, I talk with my children literally every day about being smart. They owe it to society. Society is relying on them to do something important because society can't do it themselves. They're not smart enough. So they need people like my children. I'm like you guys. Society needs you to do something with your brains. They're counting on it. They're relying on it. You have a social, moral obligation to continue to do your homework, be smart at school. We need to do things in the summer to keep you smart, to get you smarter. We need to put you in the right situations. And then, I keep telling my daughter, you're going to go to Harvard just like me. I tell my son, you're going to be right across the street going to MIT. And you have a social and moral obligation not just to be, but to do something to better society, because society can't do it on their own. Isn't that interesting? Every single day I talk about that from one way or the other. It's a conversation. I said, because my son went to space camp, went on the multi-axis trainer and did the gravity machine, and learned about rockets and all kinds of fabulous things. We had a great time. We stayed in a habitat that is a replica of something that they would build on Mars. It's a really great experience. And I said, you learned about the Saturn V, where the president of the United States said, we will send a man to the moon by the end of the decade. And the whole country got together and focused on this. Money was no object. All we have the brains, and we have we'll do this. And I said, well, what about those kids that were good in math and science in school before the president had said that? When these men and women were running NASA and actually did the science to get them to the moon, well, at some point they were kids learning math and science in school. And I said, well, what if they were capable of doing it, but they said, yeah, but it's too hard. I don't want to do it. They still would have had the brain. The same brain would have been there. I'm telling my 10-year-old son this, right? I'm like, what if they're in school and they're just like, they have it in them. Their brain has it, the capacity to do the math and do the science, but they're just like, yeah, but my dumb friends, they don't like it. They think it's nerdy. I think I'll just do soccer like all my other buddies. I'm like, no, 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 no. There's plenty of people doing soccer. Do the math and science. Go to NASA. Put somebody on the moon. We need you to do that. That's your destiny, right? Or do both. But but my dumb friends, they don't think that's cool. No. So I'm like, what if they just didn't go on to NASA, or NASA had the type of people that just said, oh, well, that's hard. We can't do that. The president's just like, find a way to put someone on the moon. They're like, are you crazy? That's hard. NASA doesn't do hard things. we can't do that. Just imagine, right? Like we had people like that. I said, no, they did it. They found a way no matter what, no matter how hard the math is. And I said, you take a computer as powerful as what? We used to say like calculators, except calculators are unbelievably smart. As smart as, I don't know, your thermostat, but even that doesn't count anymore, right? And then say, all right, do the math to show how you send a rocket into space, swing around the Earth once or twice, slingshot your way without rockets now, across the space, grab the orbit of the moon, circle around there a couple times, land a little module on the Earth, on the surface, pick up some rocks, go back, catch the capsule that's still moving around, grab that, redock that, and then boom, slingshot your way around the moon again a few times and get back to Earth, and then come in at the exact angle and trajectory to not burn up. And do it basically with no computers. Like, holy crap, is that unbelievably difficult math and science? Good thing they didn't quit, right? Because if you explained it to a normal person, they would say, oh, that's impossible. Uh-huh. Right? So what is it that we do? We do things that are hard as foreign exchange traders. You know how many people fail at becoming foreign exchange traders? What percentage of people fail at becoming foreign exchange traders? What's the number you read? 95%? That's what I read when I first wanted to become a foreign exchange trader. And you know what my response to that was? I said, holy crap, 5% are successful? Because I'm an entrepreneur. I'm used to like 1,000,000 to 1 odds. Dude, really? 5 out of 100? Oh my God, that's easy. I only have to beat 95% of people that are lazy and undisciplined and aren't willing to do the work and are not willing to put in the blood, sweat, and tears for years. Because it's like 95% of people aren't capable of anything. Like, that's all I have to do is beat 95 out of 100? Oh man, gee whiz. I can do that, right? Show me, what is it? What do we need to do? How hard can it be? You buy low, you sell high. Done. Next. Let's go. And that was honestly my response. Because I think it's more difficult to launch a restaurant. Plus, how much money do you need to launch a restaurant? To buy or lease the thing, to fix the place up so it looks nice, maybe to some new stuff that goes into the kitchen. Then you got to hire and train staff. And then how long until you make money? How many times have you seen a nice restaurant that someone put like $1 million into? It's in a good location and everything, and it doesn't make it past its first year. And every time I see stuff like that, I'm like, that guy might have dropped $1 million on that and didn't get through 9 months because he didn't have another $1 million in cash to get him through, because he's not going to be profitable for 2 or 3 years. I mean, you didn't drop $1 million onto your foreign exchange thing and get, but like, oh my God, open a restaurant. Good luck with that, right? With this, you need very little up front, right? There's no cash receivables, no cash, no payables, right? Very little startup costs, almost no startup cost. Especially if you're trading a demo, you don't even actually need to use money, right? I traded a demo for 2 years, right? You can get good before you even put money in, right? There's no employees and all these different things, and there's no real overhead. It's just an amazing thing. And so, do you need to be a PhD Or some of the guys at NASA have multiple PhDs. Do you need stuff like that? Do you have to work at a bank to become a success in the foreign exchange market? No. It's really, really achievable if you're doing the right things. Now, inevitably, what I find is that, let's say you guys are not part of the, let's say you're right now, you're probably not successful, but I wouldn't put you in the 95% that are likely to fail. So let's say you're on the cusp of, you're in the top 5% of the 95%. Like you could, but you may not, all that kind of stuff. Like you have the capacity and capability, but you may not be doing the right things. And that's why I'm here. Right. And let me just say this, because I think we're actually way out of time, so I apologize for that. Sitting down and trading every day is not the way to become successful. Okay? Practicing. So think of it. There's two golfers. One guy golfs every day. Never gets coaching, never goes to the driving range, just golfs with his buddies every day. My father golfs more than 100 times a year. And he may not actually be as good of a golfer as he was 10 years ago. No joke. He's maybe it's just when he comes and plays with me, but he's not significantly better. Right? Every time he comes here, he's like, I have a confession. I don't use my driver anymore. In fact, it's not even in my bag. I leave it at home when I'm like, you don't even use your driver, but you golf 100 times a year. How can you just skip a club? An important club, right? Yeah. So anyway, I can, I love my father. He's one of the nicest guys you'll ever meet. You'll like him right off the bat. Golfs 100 times a year or more, not a better golfer, generally speaking. So then you take a guy that, let's say, hires a coach, and what they do is they focus on very, very specific tasks. Okay? How to stand properly, how to grip the club properly, how to follow through, how to aim. And the guy's like, but I want to drive. No. Here's a 7-iron. Aim for the yellow flag. You're like, but that's easy. I want to hit the big dog. Like, forget the big dog. Line up. So you line up. You're like, whoa. You're not even aiming at the yellow flag. Yeah, I am. No, you're not. Look, and you drop that down there. Dude, you're not even aiming at it properly. Oh, I didn't know that. All right, take a swing now. Whoa, what the hell is that? Oh, that's my swing. Really? You see the plane you're on? Oh my gosh, you come in steep and then you swing open. You're wide open and flat here, and then you come through and then you're steep, which means you're going to come inside. No wonder you hit the ground 3 out of 4 times. The thing pops. No wonder you're aiming so far left, because by the time you hit the ball, your club face is so open, you're aiming, your ball's going to go right. So you're aiming way left, but it's because oh my God, you're a mess. Yeah, but I've been golfing for 20 years. Well, you sucked for 20 years. So I'm going to have to teach you how to hold your club, how to lift your club, how to swing, how to have a square impact when you hit the ball, how to follow through. I mean, yeah, you have 20 years of experience sucking, so let's change this, right? And so now that's the kind of thing you should be focused on, right? Very, very, very particular things. And then master that. And then what? Add another little particular thing. Things like pivot points, things like support and resistance, things like price action, things like lining up dailies with 1 hours or 4 hours with 1 hours or 4 hours with 15s, or how about particular patterns, double bottoms with higher highs, double tops with lower lows. Just very, 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 very specific things. and then master them. Because I'll tell you what, there are a lot of people that hit golf balls to the right when they're right-handed. And what's their fix for that? They aim left. And that's how they proceed for the next 20 years. Do they get any better? Do they spend 6 months working on how to fix the fact that they hit right every time? No. What do? They just keep aiming farther and farther left because they hit the ball right. So if they aim way left, maybe sometimes it'll hit the fairway. I'm like, well, if you put a little bit of effort in there, you can just learn how to hit straight. And if you could do that, then maybe your next shot will be more consistent. And then maybe you're going to hit greens more often. And then maybe you should three putt less. You know what I mean? You should be shocked that you three putted. Just devastated. But my putts are 40 feet long. Well, then why don't you work on your approach shot so that your putts are 20 feet long? You should kind of get it within a 3-foot radius from 20 feet, and then it should be an easy tap in two putt. Let's focus, and start with the lame stuff like gripping your club properly, lining your feet up straight, bringing your club back on a proper plane, because you can't do anything else if you can't do that, right? If you can't trade price action, how could you possibly trade Forex? How can you trade Forex successfully when you don't know the top and the bottom of the market? And clearly, like I've showed you, commodities as well as currencies, other people know the top and bottom of the market, if you remember these monthly pivots. So there's a professional trader in New York City. Okay? On June 1st, he's going to look, or she's going to look at her monthly pivots and say, all right, for June, I have a projected top for bullishness and a projected bottom for bearishness, and we'll see how the market works its way out through the course of June. That person, she knows. And yet you may be walking into the market and you're like, what's going on? Right? Look at projected top, projected bottom. How do you not know that as a currency trader? Isn't there an obligation to know? You're like, you want to become a foreign exchange trader that's profitable and successful. And maybe one day trade other people's money. Well, if you trade client money now, you have an obligation to know that stuff. And if you don't, you might just be a liability. Mama didn't raise no fool. So now you owe it to your mother. Right? You wouldn't kiss your mother with those pips. So thank you for the moderator. I'm sorry I went on and on and on. I really do. But you're my sweet baby, and I appreciate you guys. So anyways, have a wonderful weekend. If you're in the United States of America, you have a nice long weekend. I hope you enjoyed today. Yeah, okay. Peace on earth, may the pips be with you, may our profit be above average. Thank you, Amanda. Thank you, Pan. Thank you, Andrew. Oh, is that right? Long weekend in the UK, huh? And of course, in France, I'm sure that it's a strike. It's if the weather's nice in Paris, they're going to strike. Every day is a strike day, except for the 2 months holidays.